British pound moved lower today, getting north of 132 yesterday, but today falling back below that 132 level, a level that has recently struggled to maintain and push above. Taking a little bit of a step back here, at early February, the pound was trading around 136 against the dollar, moved all the way down to 130 prior to last week's Bank of England meeting and subsequent Fed meeting, and then has been in a little bit of a short-term relief rally, we'll call it, up to as high as 132. And that's where it sits today, kind of waiting for that next catalyst event. Perhaps one of the reasons we saw the pound slow its move higher today was that the UK Office for Budget Responsibility came out and moved their expectations for UK GDP from 6% down to 3.8%. Clearly, the Bank of England may run into some of the same problems that our Fed is going to run into, and that's trying to deal with higher inflation and making policy more normal, while at the same time trying to maintain growth. And if those growth numbers come down, it's very difficult for them to expect positive things if you're trying to slow down an economy that isn't moving in a positive direction. But right now, those growth numbers are still higher than here in the U.S., expecting 3.8%, but that's down from what they were expecting, which was closer to 6%, and likely some of the reason we saw the pound moving lower today. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that we did see volatility coming off as the pound was in decline over the last 4 or 5 weeks. And then things turned around and the pound went higher. Volatility has slowed its descent and started to move a little bit sideways. That's what we saw today. Interestingly enough, though, the Bank of England had already started raising rates prior to the decline in the pound. So while we do look for a strong central bank and very good policy to maintain a positive and strengthened currency, that hasn't been the case here. It's really been more reactive to what's going on with the US dollar, and that has been elevated given the stance that the Federal Reserve is taking, a more hawkish stance moving forward, looking to raise rates more aggressively in 2022. Lastly, let's look at the positioning. What are those speculators doing? Well, prior to last week's BOE meeting and prior to the subsequent Fed meeting, they were adding to their shorts. So they were expecting possibly a stronger dollar and a weaker pound, and that's exactly what they got. But since then, since that Bank of England meeting and since they raised rates, we've seen the pound moving higher. So part of this rally may be speculator driven, maybe covering some of those shorts. We may get a look at that tomorrow when the latest CFTC numbers come out, and that will cover that central bank meeting from last week and into the beginning part of this week. So keep an eye out for that CFTC report to come out on Friday afternoon. So the pound right now seeing a bit of a sell-off prior to the Bank of England meeting, then seeing a relief rally higher, stalling at 132 as growth expectations seem to be on the decline, while the Bank of England continues to want to raise rates, a very similar scenario we're seeing here in the United States.